Hey guys, Taylor GammaEdge here, coming at you with a post-market recap for June 12th, 2025. Kind of two characters to the session today. The morning session, again, a nice ramp higher. Afternoon session can just be thought of kind of grindy, choppy towards the top of our transition zone. Both 60-20 and 60-45 were key zones we had called out in the pre-market based off of our simple, straightforward analysis of options market structure and the positioning of speculators. So with that, let's get into how we exactly got those levels, the plan we laid out, and then seeing how price played out to the context for intraday tools. All right, so here, this is our 0DT dashboard markup this morning. Same zones as always, the blue and the white. These are our DEX and our DEX transition zones. Nice confluence there. Dropping to the range from 60 to the upside down to 6,000 to the downside. Keep in mind too, 60-20 was also a key level in the structure in terms of the distribution of speculation and being a large downside level. Right, so the pre-market plan went something like this. We were gapping lower, we knew that, and we knew that 6,000 was kind of the downside level that needed to hold. Failure to hold that level, and we start to really work down into kind of significant put-dominated territory. Right, and so above this, in the structure as defined by the drunken sailor zone, we had a pretty big air pocket in the structure. So what this really means is just a meandering of price, all else equal and absent, significant intraday buying or selling in the market, which our intraday tools show us. We'll get into that in a second. So, really, until we were able to get through the top of the DEX transition zone of 60-45, we're not super invested in playing anything in the middle of this transition zone. You'll see 60-45 was the key upside level that we kept bumping our heads against. And again, as we noted, 60-20, this was also a significant level with the intraday action as well. Right, and just to reinforce that point, yes, I know this is hindsight bias, but we've been doing those videos for months now, so you see these levels play important most sessions day after day after day. So for that reason, I don't feel bad talking to you about this with a hindsight bias. And so again, 60-20 can see key consolidation there, then 60-45, again, clear as day level, just kept bumping our heads along that all session. And then for those folks out there that, like a little bit more on their screen, I just use simple prior day close, opening price, and then prior and current day VWAP. So again, pretty simple stuff. We could see that we had nice confluence between 60-20 and the prior day close. And so on an intraday basis, this trade right here was actually taken by myself. The reason being is it was a great risk to reward trade. Understanding, yes, I know that this was the chop zone. However, this area right here of 60-20 in the prior day close was kind of a definitive area, especially kind of psychologically, if we could push over the prior day close. There was the potential because, there was this air pocket of seeing that move up to 60-45, which is exactly what we got. And then from there, right, that's where we were not able to see a significant push higher with any intraday volume metrics and really just choppy in the exact chop zone that we laid out for you. And so getting into those kind of intraday tools for starters, our market trend model, filter tick very flat in terms of really no significant buying or selling on the session today. Cumulative tick itself too, for all intents and purposes, was flat on the session as well. So again, while we did get that initial impulse higher that we can see right here, it was just fairly flat throughout the rest of the session. One reason for that is, as we can see with this chart here, this is our intraday volume analysis, right, where we're just analyzing SPX 0DT volume throughout the session, is there was just no expansion higher in call speculation. When we have a signature like this that is sideways to lower, that just kind of puts a cap or a lid on the upside of the market. And so, right, yes, we did have constructive kind of an upward signature in the put speculation throughout the day. So, it wasn't a risk of like a material decline. But again, at the same time, just choppy action made a lot of sense, especially we knew 60-45 was a key level and we were not seeing significant expansion above that. So again, lid on the market for the day. Right, and just so you can see the utility of this tool, because I know that at the end of the day, snapshot may not be the most useful for you. But here's an example of what this snapshot looks like at 1:05 Eastern Standard Time today. Keep in mind this prints every 5 minutes. And so we can see that the distribution of call speculation throughout the session to that point was very flat. And we can understand all else equal, that distribution is going to continue to be flat. And again, price follows where that distribution of speculation is occurring. So if we know that calls are likely to go this past, all else equal, puts are likely to continue here, then we know that Most likely price is just going to be choppy the rest of the session, and that is exactly what we got, and that is the utility of this tool. It tells us A, what the character price action is in the current moment, and B, what the potential likely path of price is through the close. So knowing this information, I know we had a lot of people today after that initial move higher, where we're selling just premium on both sides of the market because it was likely going to be a choppy session. And so, right, this tool, the market trend model, leveraging that with our levels is great for both intraday future scalping, like I do myself, or, option selling that a ton of other people in the community do as well. So with that, we are right at kind of the 5-minute benchmark. You should have a clear understanding of our pre-market prep, how we get those key levels, and then how we use the context of our intraday tools with our levels to, take advantage of 0DT price action or intraday price action per se. So with that, you guys have a great night. You have a great weekend. Make it a good Friday. We'll talk to you next week. Thank you. Bye.